Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted today to be able to speak to Eric Hook, CEO of Northbridge Industrial Services. Northbridge has two divisions. Firstly, Crestchick, which sells, manufactures and hires out specialist load banks that are used to test electrical and power equipment. And secondly, Tasman, which is a gas and geothermal drilling tool hire business down in Australia and Southeast Asia. So welcome, Eric.
Hi, Paul. Good to speak to you again.
Yeah. Now, I know it sounds quite incredible, but sort of 20, 30 years ago, I studied electrical engineering at Southampton University, but it was a bit of a miss. Can you just sort of quickly walk us through a real life example of what a load bank is and what it's used for?
Yeah, I mean, a load bank's used to test critical power supplies, principally for things like hospitals, the ICU units, very topical at the moment, banks also. And what they do is where critical power is needed, users need to install backup power and UPS, uninterruptible power supplies, to make sure they never go offline. What a load bank does, we use the programming to simulate exactly what might happen if there's a power failure or a power outage or some other brownout or blackout. And so we can use that to simulate the load coming on, going off, being intermittent, and see what happens to the backup power supplies. And it proves that they will actually work when they come to be used in an emergency.
And there's more sort of like network problems now, because we have sort of a greater use and dependency on renewables, sort of like wind farms and solar, which are sort of like, if there's a few clouds, it stops the solar cells. And if your wind is not happening or it's going too fast, you have to turn the turbines off. So the dependency of both Western and developing markets, electricity supplies, is now becoming more variable and intermittent, I guess, which means that more commercial users will need their own backup power supplies, I guess.
Well, it's not just the backup power supplies. I mean, they are increasing in need, but it's the fact they have to be reliable. And it's the reliability issue about this, which it impacts our business. And what we're seeing is an increase in demand right across the world, but particularly the advanced economies, to prove their power supplies.
Yeah, but I mean, also you've got sort of commercial customers who may have never had their own sort of backup supplies, they never needed it, but will need them now because they might have a temporary blackout for 2 days, as it happened in California.
Well, that's right. And if you only have to think back to last summer before last rather, we had a major outage that lasted for a long time. It was very controversial. There's a wind farm that tripped out as long as a gas peaking plant right at the very same time, and half of England was blacked out for quite a long time.
Yeah, and I saw in your positive trading update yesterday, you mentioned that you sort of like the conditions were buoyant for power reliability testing in Crestchick. Can you just quickly talk through that?
Well, in Western economies, particularly those that have been struck by COVID, people working from home, people relying absolutely on their internet connection, their ISP provider, and these things have become very much more critical, and people are spending a lot of time thinking about them. And this is leading to additional queries, additional enhancements to their systems in order that we can move forward when the pandemic ends.
And if you're a sort of like a mission critical, sort of like, hospital or a data center and stuff like that, do you typically hire the load banks out? Presumably you don't want to own them, you want to hire them out.
Yes, we find a hospital will use a service company to do a regular load test, and they wouldn't own them. However, data centers, we find data centers actually buying quite a lot of our equipment. So not only do they rent equipment for major tests, but they do regular routine tests using the equipment they bought for us. And we do quite a lot of, what they call Ultrascale type work now for some really big ISP providers.
Right, and I guess that's driven by the likes of Amazon Web Services and Google in the cloud, I guess. With everything
yes, and Apple and people like Microsoft. They're all very very focused on reliability.
Yeah.
I mean, data has become very important.
Yeah.
Nobody wants it less secure and less of it.
And how big is this market? I mean, it's still quite. It sounds fairly niche, but how big is the sort of the data? Sorry,
well, we're talking about something like 11 or 12% of the entire Western world's power. Output. So it's getting very, very large.
Yeah, but for the load banks in specifically, I think I saw a number of about $300 million or something like that. Is that a familiar number or not?
Yes, it'd be around about that. But those in the good old days before the crisis hit just in the last year. So and we are expecting that to start growing.
Yeah, and I'm guessing it's going to grow reasonably fast because, I mean, renewables, they're talking about it growing at sort of 15% per annum, data centers at 35%. So if we thought sort of traditional power generation was a sort of GDP plus, this market for the need to test your power supplies and your your backup sort of like energy farms and all this sort of stuff could grow sort of like high single digits, low double digits, presumably.
That's right. I mean, historically, going back before this happened, we would expect it to grow faster than GDP simply because of the reliability issues. But increasingly, as renewables get added, this is leading to more testing.
Yeah, and have you got enough load banks to do all this?
Well, it's surprising you should say that, but usually it's sod's law, isn't it? Where you need load banks, but they're in a different continent.
Yeah, well,
also have to move them back again.
Yeah, well, also in the trading statement, you mentioned you've got the sort of third consecutive year where you're going to have a record year-end order book. So obviously, your clients are also struggling to get sort of like load banks.
Yeah, it's strange because they're going all over the world. There's nowhere on the planet we don't actually sell load banks or rent load banks in. So we're not the only supplier, but we have a good footprint in the world market.
And how much do these things typically sell for? I mean, if you've got a large, big load bank that tests data centers, well, I don't know, 50,000, 100,000. I mean,
no, probably a bit more than that. 150,000. Okay. They can be very specialised and on trailers. Yeah. We built equipment, recently, I think for EDF, which was getting on for £400,000.
Right. Okay. And how long does it take to manufacture a sort of a state-of-the-art load bank that does all the simulation?
It depends. It depends how much labour you can get on it, because at the moment because we're COVID restricted, we have social distancing in the factory, means only one person can work on a container at once, but it's about 600 man hours. Right. So we're getting a bit slower now, but that will speed up once the pandemic eases. But we're pretty efficient.
Yeah, and then when it comes to sort of the pandemic, I mean, yesterday in your trading statement, you mentioned that obviously there's been quite a few sort of projects during it because it's been difficult to get engineers on site to be actually at your customer's site, so you can actually deliver things like load banks, etc. Is there likely to be a lot of pent-up demand next year? Because
absolutely, yes, yeah. I mean, there's no doubt about that. Not so much actually in Europe or the USA, but certainly further afield where people do rely on international travel to a greater extent. That will be the case, and it's true of both Crestwick and Tasman. In fact, there will be sort of pent-up demand. Not sure when that will hit. It might not come in the first quarter. Might be later in the summer.
Yeah, and then also you've got sort of like overlaying the pent-up demand and organic growth rates of sort of renewables and power reliability testing. You've also next year got the Olympics in Japan, and you've got the Euro Football Championship. So, and that, certainly the Olympics takes on a lot of temporary power. I know Agrico has got some huge contracts that it's going to be servicing next year. So you've got almost like a perfect demand spike next year.
Yeah, I mean, you've certainly seen televised football where at night where the floodlights suddenly go out with no explanation. Not ideal, is it? And I think when we did the World Cup, back in Russia, they were very concerned that any interruption to the TV would be not very good for them. So they did actually put a lot of effort in making sure that they had proper backup systems in case the public power supply failed. And so they did use load banks, and it was very successful.
So globally next year, then there could be a real sort of like, need for a lot of load banks, given you got that pent up demand and Olympics and big competitions.
Yeah, that's true. But a load bank can test a lot of systems. Some of these tests are relatively quick.
Yeah.
Particularly where there's a routine built up and there's professional people doing it. For bigger projects further afield, it's more complex. But generally, we don't think there'll be a shortage as such. We'll have to move stuff about. But
you just need a fast car or a fast truck to take them around. And then the other thing which sort of like caught my notice yesterday was the sort of the emphasis you're putting on sort of green and environmental and ESG credentials, because the business, the group has really flipped. You just talk through that over the last 5 years, from sort of like now into sort of like carbon reduction services.
Yeah, I mean, if you look at our best ever year in the past, 6 years ago, 2014, we had a great year. But as the oil and gas crisis hit and the demand reduced, a lot of this work has fallen off the back. But certainly in Crescent, we've grown the rest of the business, and this is where the impact of renewables and green energy has really benefited us. We're seeing that work now repatriating in many respects from the Far East and the Middle East back to Europe and North America. So that's a very encouraging sign. And we've been able to redeploy equipment from the Far East into the USA, and that provided a core fleet for us going forward.
Yeah. So if the group has sort of pivoted to green and clean, has the board ever considered sort of changing its name from Northbridge, I don't know, to something like Cleaner Power Services or something like that?
Well, it's always something we'll decide to do at some stage, but I don't know when that'll be. I quite like the name Northbridge, but I'm not.
And as the business goes forward with with Crescent, is it still going to stay sort of 50% sort of selling load banks and 50% sort of higher than that? Or is it going to be more?
We're very much focused on rental. It's certainly a rental product which is suitable for rental. It's quite capital intensive.
Yeah.
The rental rates are very high.
Yeah.
The use is quite intermittent and very specialised. So we maximise our returns there in terms of gross margin and on return on capital. So we prefer that. However, a lot of people want to buy them. They need to own them. The data centres, for example, people who build generators or rent them out themselves will have workshop equipment where they need to do the testing. So there is certainly a sales market, and we're active in that.
Yeah. So if there's sort of priorities on sort of like hiring them out, what are the sort of the drop through rates, the EBITDA sort of like, or the contribution rates?
It's really very, very high. I mean, you're talking about 85%.
Yeah. Okay.
We're very sensitive to operational gearing, particularly on rental. And the reason that we can become very profitable is that get the rental up as high as you can, and it does make a difference.
Yeah.
As the volumes increase.
Yeah. And what about your future sort of like expansion plans for Crescent? I mean, have you got enough capacity, or are you sort of like expanding capacity?
Well, we're looking at expanding the production facility we have here in Burton, and we certainly do that. We own more locations here, so we can grow them. Skilled labour is not so much of a problem now as it might have been last year, for example. But there are no obvious constraints on the production side, and we have a very large hire fleet. We don't seek an aftermarket. We don't sell second-hand units into the market. We transfer to our hire fleet at cost from the factory. Certainly, the extra capacity in the factory would help us build that hire fleet, quicker.
Yeah, and I guess because you're a sort of like an environmental company, I'm guessing sort of planning permission, you'd be able to get to excuse the pun, the green light quite quickly.
Yes, that's right. Yes, yeah, well, that's what we're hopeful for. So
okay,
we've actually applied for planning consent for another unit at Burton.
Oh, okay.
So that's going through at the moment, I would hope.
Good. And then just moving now to Tasman, the sort of the other side of the business, which is about, I think it's about 40%. Again, I mean, it's pivoted to sort of green and clean, and is now sort of gas and geothermal.
Oh, it's quite extraordinary. I mean, go back to 2014, 80% of the work we were doing was oil related. Come into this year, and 80% is not. It's 80% is gas, geothermal, and in fact carbon capture. We did a big project for an experimental project in South Australia earlier this year, where they were injecting compressed CO2 into an underground cavern.
Right.
And as they build, certainly the blue hydrogen industry, they'll be looking to capture the carbon from that and inject it underground. So this is obviously, work for us if we benefit from that.
What is blue hydrogen?
Blue hydrogen is made from sources that are not green.
Oh,
so the idea
okay.
is mostly natural gas, to be honest, because it has a lower carbon content.
Right.
And the idea is they can use natural gas either to create hydrogen through electricity and by electrolysis, or by sort of heating method. And it makes it quite easy to capture the carbon off that. And once you have the blue hydrogen infrastructure, then you can use the solar and the wind then to create green hydrogen, then to exploit it.
Right.
So it's quite a big project investment going on by the Australian government at the moment.
Yeah.
They do have a lot of gas, and there's a lot of impetus in exploiting the gas reserves in order to move faster to a hydrogen economy.
Yeah, this was one thing which really sort of like was very pleasing yesterday, was because if we just cast our minds back to April, I think it was the 20th, and the oil price front month Brent was minus $40 a barrel. And 5 years ago, that sort of thing would have probably been a much bigger knock to Tasman. But from the statement yesterday, it sounds as though, you're going to trade it better than you did last year in Tasman, which just shows the resilience of the business.
Yeah, that's right. We had a very good first quarter, back into profit. We're very, very hopeful about that. And then, of course, as you say, the COVID happens, and the oil prices has been hit, and there's been a knock-on impact on investment in the industry. That does actually make Australia and New Zealand very, very short of gas for all sorts of reasons, all sorts of projects, including for domestic supply.
And it's become quite a political problem in Australia, because they've sold all of their gas as LNG to overseas players, and now they're short of it, so they have to actually produce more gas, don't they?
That's right. Of course, we're called in to help with that. And in New Zealand, of course, they're having to re-import coal because they're short of power. It's been a dry year, global warming.
Yeah.
So,
and that's the beauty of gas. Basically, it's replacing dirty fuel, sort of like your coal, diesel, and oil, isn't it? In industry.
Yeah. There's been very significant moves in that direction, particularly in those Far Eastern economies that surround Australia. I mean, Japan, South Korea, China, India are all moving very rapidly to less carbon activities. Yeah,
and just on the operating leverage for Tasman. I mean, if you put an extra pound on, what's the sort of like the profit contribution which comes down from
it's not as high as the Crescent one, which is 85%. It's upwards of sort of 65 up to 75%. There's a few more sales driven activities there, so it's slightly lower, but it's still pretty high.
So next year, I mean, in the next sort of 5 years, I mean, you look at the sort of the drop-through rates, and nobody will hold it to you here because nobody knows what the future is. But the business does round about, I think it's about, was it 34 million pounds of revenue, of which sort of 60% is Crescent, and about sort of 10 million or so is Tasman. How big could the business get to in sort of organically?
Well, the impact of rental revenue as a part of the mix is very, very important.
Yeah.
Just explained to you that the drop-through rate, is between sort of at worst 65% and at best sort of 85, 90%. Does really make that operational gearing does really make a difference. And is a key measurement to look at really is how that rental revenue increases.
Yeah.
And that's why we're very focused on the rental side.
And how would you think about that? How big could the sort of the rental side get to then? I mean, if it's sort of like, I'm guessing it's 20 odd million pounds at the moment, could it double in 5 years? Could it go 15% per annum?
Yeah, I see no reason for that. Obviously, with there being investment in the hire fleet, and certainly since we started, Northbridge started with Crescent and Tasman, we've seen those sort of figures in the past.
Yeah.
So there's no reason to expect that they wouldn't be achievable.
And what return on capital employed were you hoping for? I mean, it's sort of like normally rental equipment or rental players trying to go for a 15% sort of return on capital employed, but you guys sounds as though you've got even more operating leverage.
Well, it depends on utilisation, of course, and we don't have a high utilisation model because our equipment's required right across the world. So if you don't want to turn work away, so availability is of key importance. But we would look at sort of high teens at best. But it's getting the mix up and getting that rental revenue in. That makes a significant difference.
Yeah. Well, I mean, I've done a valuation on very modest growth rates of sort of like 8%, 9%, and just took even a low teens return on capital employed, and I'm getting a fair value for the business of 175p. So compared to the shares currently at 85, there seems to be plenty of upside. And one thing I really like about the business as well, it seems to have a lot of asset backing. I mean, I did see in one of the presentations that if you took the market value of the hire fleet, the replacement value is about £50 million compared to, I think the market cap of the business is what, 25 million or something like that? Well,
yeah, exactly. And it's a very important point, that, Paul. I mean, we transfer hire fleet from our factory at cost. So, anybody else building a hire fleet like that would have to pay retail price.
Yeah.
So we have an advantage. there, and of course we've been adding to it for 15 years. I mean, it's not a product that wears out, doesn't have an engine, has very few moving parts, so it has a very long life, and we keep adding to the fleet and growing the business in that respect. Tasman's slightly different because they are wearing equipment, but again the utilisation tends to be lower because it's more specialised. And they have quite a long life as well, at least 10 years. Yeah. And you own a proper freehold property as well, is that correct? On the books, it's got an MPV of about 5.7 million, I understand. Yeah, that's right. Most of it's in the UK, in Burton. We own 3 sites in Burton, all freeholds, and we have a freehold also in New Zealand.
Okay. So, I mean, if you put that together with your market value of your hire fleet plus a freehold property, you get over £55 million. And you've only got, even on a fully diluted basis, you've only got sort of like 32 million shares or 33. You will have 32 or 33 million shares, which frankly means gives you an asset backing market worth of about £1.70, £1.80. It seems.
Don't forget, a lot of our hire fleet is fully written off.
Yeah, exactly. Yeah. So there seems to be sort of plenty of upside. One thing on the balance sheet, you've got you renegotiated your convertible loan a few months ago. I don't know if you can. I know it's probably confidential, but what's sort of the view on the convertible loan going forward?
Well, the reason it was renegotiated really just to get an extension because we didn't know how long COVID would last. We didn't want to be renegotiating this in April next year, where we would have had to do it. In order to get liquidity to get through the year. So we'll obviously go back and renegotiate our funding package in its entirety, in the spring. Yeah. And we're looking to see what we can do then. But we don't have a large amount of debt at the moment.
You've only got 2 million, so and you're generating cash, so
yes. I mean, we've got a lot. A lot of opportunity really to do a better deal with that coming into, particularly if COVID's on the wane in sort of March, April next year. The banks are looking at us. We've got a very solid asset backing. We have very little debt at the moment, so we're quite positive. Interest rates are low, and we have plenty of plans.
And your customers, I mean, it sounds though if we get a sort of like a triple whammy of sort of like pent up demand sort of releasing. We've got some bigger games, and we've got sort of like a recovery in the economy. It's particularly in terms of sort of like product energy and stuff like that, and on top of that, renewables. I mean, you're gonna have your hands full just delivering all of that.
Yeah, don't worry about the games though. Don't worry.
Okay. Okay. Just finally, then, sort of like the news flow over the next sort of 3 to 6 months. How do you see it? You've just done a trading update, and will there be another one in January, or are you just going to wait until your prelims?
No, we'll have another update probably end of January, beginning of February. I think we found it useful actually during COVID to give as many updates as we can, just so there's no sort of false news or worries about how we were performing. And actually, COVID has been damaging, but not nearly as much as it might have been when we started.
Yeah, well, the board must be, given mass immunisations and vaccinations happening, even just starting in the sort of the UK this week. I mean, it must be the level of optimism for the business. I mean, I remember chatting to you 6 months ago, and nobody knew what was going to happen, and you were sort of like saying, well, it's going to be a low in the third quarter, and then we'll sort of start making back. And actually, it's all sped up, hasn't it? Your optimism must be a lot better than it was certainly 6 months ago.
Yeah, absolutely. We've had some COVID cases here in the factory, but if it happened in March, it would have been really problematic. But it just happened like a month or two ago, and we've taken it in our stride. The guys are all back at work. We've got a COVID secure location here, and we've been able to manage it. It's the problem, as I say, is the travel bans, particularly overseas.
Yeah. Well, they're going to lift it sometime next year, no doubt about it.
Yeah.
And it's insane. Okay, well, thanks very much, Eric, for your time. That was fascinating as ever, and look forward to hearing how the business progresses over the next few months.
Thanks for your time, Paul.